Hello everybody and welcome to today's webinar about algorithmic trading in less than 100 lines of Python code. Yeah, actually this topic dates back a few years when O'Reilly approached me and asked me whether I could write an article like that, and I did. And I was recently told that this was the fourth most successful article they ever published on their own page. And recently, towards the end of last year, they asked me whether I could update the version, and they then put it on Medium. And the idea is today just to guide you through the content of this article and to explain the code and to discuss topics that are related to this exciting field of algorithmic trading. And originally, I thought maybe to trim it down to 50 lines of Python code. With recent advances, this would easily be possible, but we simply left the number as it is. I think it's amazing enough to be able to do that today. When like 10, 20 years ago, this would have involved like $1 million budgets to even get started in the field. Right, here's the agenda that we have planned for today. I have a quick introduction for those who don't know exactly what we are doing at Python Quants and at the AI machine. I will then briefly discuss data-driven finance, and I will then hand over to Jason Ramchandani from Refinitiv. Happy to could win him over that he presents a case study up front about sentiment, which has become so important recently. Usually it's not kind of like a daily topic that is covered in the financial press, but with the GameStop story and the Wall Street Bets group on Reddit, this has become kind of a hyped topic, so to say. So pretty happy that we have a case study. I will then quickly show you the article. This is more or less just like a quick scroll through the article itself. You have, of course, access to it. I've shared the link. You should have the link available anyways. It is here in the slide deck as well. Then we enter the world of trading platform, of course, just paper trading, demo account. Not risking any money at this stage. I will also present you with a disclaimer in this regard, and then I walk you through the trading code. It's not that long. Again, expectation is less than 100 lines, so we will check it out, and we'll then have a minute or two, three, where we have a look at the AI machine and how the exact same algorithm can be deployed on our deployment platform for algorithmic trading. The code is simple enough that probably everybody today following along will know exactly what is going on there, because the core idea of the algorithm that we're going to cover, it's a momentum one, a time series momentum, and this is just like the core algorithm is 2 lines of code, if you like, so to generate the signal. Last but not least, I want to say a few words about a certificate program where we spent hundreds of hours to go through all the details related to algorithmic trading with Python. This guy. Yeah, quick introduction. Here's just that you have the link, tpq.io. There you learn everything about what we do with regard to services, training, run platforms, provide open source different forms, not only like Jupyter notebooks that I shared today, for example, but also full-fledged packages, among others like the TPQOA package that we're going to use. We run events, recently still live events, more recently just digital events. I'm happy that this works out so well, and we provide our certifications with regard to Python for algo trading and Python for computational finance, and I publish a couple of books. So just for you as a reference, the second company or second major project is the AI machine, and this is what I want to demo at the end, where we have the same algorithm from the article deployed on our platform, right? But this is live, more impressive than just like the screenshot here in this context. A quick summary for you to read. Feel free to go through it. Should be the typical 2-minute read. I don't want to go through the details here, nor do I want to go through my CV. It's just the long version for those who are interested in. It's not basically a CV, it's more or less it's a summary in terms of like link-based information. You find basically all the relevant links for what we do, for what I've done in the past. A quick look at the books. My background personally is quantitative finance, a PhD in quant finance, and here are the 2 books about the topic itself. So it's Finance First and then Python, This is how I distinguish the types of my books, right? Derivatives analytics and listed volatility and variance derivatives are like theory heavy plus Python, right? And then we have my reference standard work, Python for Finance, second edition, 2018. Code, I'm pretty happy for the second iteration. We managed to get the code kind of like future-proof to a large extent. From the first to the second edition, we have had so many changes from 2014 to 2018. There were major upgrades necessary, but now the ecosystem, I'm happy about that, has become much more stable, such as Pandas, to name just one of the major packages that I used. These are the books from last year, 2020, Python for Algorithmic Trading, and this is like the long read. So when we have the Medium article with 100 lines of Python code, this is like the 350-page version of it with all the details, and the subtitle says it all. From idea, so from your first strategy idea to cloud deployment. So there's even cloud as deployment mechanism covered with like a full-fledged case study, which shows like from A to Z how to go from your very idea to finally a cloud-based, robust, professional, or at least semi-professional deployment approach, which is more reliable than what you could ever do on as compared to your local machine. The other book is going deeper with regard to the prediction part of algorithmic trading, AI and finance. So the two of them together, I think, can use pretty well alongside each other. So there's one chapter here about market prediction, and this is like the whole book about this topic. So going much, much deeper. Data-driven finance. Yeah, this is the world we are living in, right? So when I started studying finance, this was more or less still a theoretical discipline. Here and there have been a couple of econometricians that use maybe Excel or some other statistics tools to do some very specific stuff. But data today is all around, and the data that's available has grown so many dimensions that the typical original Excel approach doesn't work anymore. So you need different tools, you need different approaches, different hardware even to cope with what is available today. So originally, and I still do this on a daily basis, people were dependent on published news only. So there was kind of like certain point in time, usually in the evening, and then the news, the papers went to press, and in the morning you expected to retrieve it. When I was studying, I was subscribing to the German version of the Wall Street Journal, the Handelsblatt, and I was usually going out early and have a look at the news. But this was probably, given today's speed and velocity, old news, right? Because we have like a news flow 24/7. There's nothing around that. Therefore, reading the news is not enough for nobody. And since many, many years already, there are the likes of Refinitiv here with the icon terminal, or how it's called, the newer version, newer iteration workspace today, where portfolio managers, research analysts, traders, etc., have access to the whole universe of data, petabytes of data that you can access via these terminals. And if you're interested in something, let's say about Apple, what my example here is, you probably wouldn't pick up any kind of printed information. You would dig here into the offerings that you see here in terms of fundamentals, in terms of price information, in terms of news related to the stock, etc. You would maybe do your charting if you're more like in charting, or you would compare it to the index or other constituents or peers or whatever. So this is what you would do on a terminal. Newspapers, put it that way, it's not enough anymore, even if people still might have their papers lying on the desk. The age of data-driven finance means that we need to deal with lots and lots of data in this context, right? Finance data. Here you see like just like a snippet here, end of 2020, December, half an hour. I retrieve here tick data, half an hour, 32,000 tick data points for half an hour. Sometimes it can be 60, sometimes might be a little bit more slowly moving, right? But when you compare this to end of day data, where most of the finance theory is based on, there's like orders of magnitudes larger, right? When you think in terms of like 250 trading days per year times 10, 2,500 times 4, 10,000. So Apple stock is around. So Apple went public 40 years ago. So you have roughly 10,000 end of day data points, and here you have like 30,000 for half an hour, right? This is data-driven finance as compared to where most of the financial theory and econometric approaches have been based on. But not only that, there's also the news, right? And the machines are much better at reading the news. I mean, understanding is something else, but reading, doing summarization, doing overviews, doing stuff like sentiment analysis, generating graphical word clouds, etc. The machines are much better. So the machines these days crunch easily thousands of news articles in a short period of time, which is impossible for any number of human people to do it at that pace, actually. And when you think of the numbers that the big data providers such as Refinitiv digest on a daily basis, roughly 1.5 million news articles on a daily basis that are digested, processed, and enriched by metadata, etc., which makes it more easy for machines to be read. And this is now the area where we have a little case study with regard to sentiment analysis, because it is fairly straightforward to do this today as well. So my article and what I'm going to show later on is basically price-based only, so simple number crunching. But I thought it would be nice, given the recent iterations, to have a case study in this regard. And no matter what we do in data-driven finance with Python, I think we have the right platform, the right ecosystem. I rather think when I think about Python, about a strategic technology platform, because we have so many technology components there, which is well beyond a pure programming language. And this is what makes our ecosystem so powerful. So no matter whether we crunch numbers, nor doing some sentiment analysis, news processing, or combine the two into a coherent framework, Python indeed is our friend. On a small scale to get started with, as well as on a large scale, the biggest hedge funds out there, they're using Python strategically. Now coming to the case study, Jason Ramchandani. Here is like a recent article. There's no, I think it was just at the end of January when this was all happening. And here you see like that in these articles, more and more you can read like all the sentiment positioning indicators are geared towards the institutional world. How do you got sentiment on TikTok? How do you got sentiment in GIFs or memes? I don't know. Also here, like the quote, the new army of traders are not focused on valuations, but rather by momentum opportunities they see from Reddit, right? This is more like a new type of sentiment, right? Like sentiment within crowds. Within here, it was within a particular group, and you can read it, you can Google it. Now the hedge funds are all starting mining social media for sentiment, and not only, let's say, the professional financial press. But in an orderly fashion, you can easily do it with professional data subscriptions, and this is what Jason will show us now. I'm going to hand over to Jason. Let me find him. A second. Here we go. I'm going to make Jason presenter. Hope he's ready. So I'll make presenter. He needs to accept, of course.
Okay.
Welcome, Jason.
Hi. Can you hear me, Yves?
Yeah, it works.
Okay, great. And you can see my screen?
Yes, works as well.
Okay, great. Let's minimize that. Okay, so is the text big enough?
Yeah.
Yeah, okay, great. So hi everybody, I'm Jason Ramchandani. I'm the lead developer advocate at Refinitiv, which is now owned by LSEG Group. Thanks Eve for the intro. And so what we're going to do here, Eve has talked about sentiment, he's shown you some articles about that. So let's just really see how easy it is to actually do that. So I'll be working with our icon terminal or workspace, which is the latest iteration. So I'm just going to do some imports, some libraries here, using some visualization with from PyLab or plot functions. I mean NumPy, pandas for the data frames. We use NLTK Vedas as a sentiment engine, and Beautiful Soup for the text manipulation. I'll explain that later. Okay, great. So basically, I ran this earlier because and we're doing it on oil. Okay, today. So essentially what we're going to do, we're just going to get some news headlines here. So I'm just requesting here basically headlines for crude oil, the crude oil future. front month future, and just give me 100 articles. So here you can see here the data frame that it returned. Basically has a list of headlines, news articles, and the times at which they were released. And then I've got this story ID, which contains the full text of the story. This is just a headline kind of thing. So that comes straight back into a data frame, indexed on date time. So that's all very convenient for us. So what we're going to do now, we just instantiate our sentiment analyzer object, and then basically for every story ID in this data frame here, basically we go and get the actual underlying story, and then basically we pass it to yeah, and we could do that by passing it to this, passing the story ID here to this second API call, which is get new story. And then basically what I do, I create a soup object of HTML5 type, and then basically what I can do, the stories come rendered, the stories are delivered in a format which is HTML friendly, so it comes with hyperlinks and so on and so forth, so and pictures and stuff like that, so you can the news is actually you know, pretty printable, but what we don't want to analyze that portions of it, so we just want to get the text, the underlying text, so remove all the arefs, remove all the hyperlinks and images and everything, and then we have the analyzer here, we pass that the cleaned object, and then we get our sentiment score. And all we're doing here, we're just appending the sentiment score to the appropriate timestamp for each news article. Okay, so we have that in our sentiment data frame, and then basically we're just going to index and sort on the date frame here, and then we're just going to have a new column called cumusum, which is basically the cumulative sum of this compound sentiment here. So this is what this frame looks like. This is your base data frame here. So we have some negative sentiment, neutral sentiment rankings, positive sentiment, the compound overall ranking, and then we've got this cumulative sum. Okay, so what we're going to do, we're going this, if you know, notice this is actually having seconds and microseconds kind of timestamps here. So as millisecond timestamp, sorry. We also do microsecond and nanosecond for some exchanges, so it can get quite complicated. So thankfully here we're just going to resample them here at the 1 minute line, and then we're going to have a look at what just plot what that the cumulative sum of the compound looks like here. So we just get a sentiment line here, and then next we're going to move on just to get our prices. We just get our crude oil prices, 30,000 ticks. And then that's what it looks like there. We've got our price values here, and then again this comes with some millisecond timestamps here. So again, we're going to resample those to 1 minute, and then we're just going to join our frames together here. So we have our main frame here, our sentiment frame, and then we're just joining that to the prices frame. So that all goes through, and it's all very nice at the minute level, and then we can just graph that and have a look at what this looks like. So this is just a compound reading. So as it goes on, the raw reading for every minute, the average actually. So what we did here, we actually did it on the mean value for every minute when we resampled. So and this is the cumulative sum now, so we can have a look here. So this is the price here of oil, and this is the cumulative 1 minute cumulative sum of the sentiment, compound sentiment here. So we can see here that basically even here with a very simple model here, we're able, you know, the news is able to kind of pick a bottom here. You know, this is like some 10 minutes before the actual oil price actually bottoms, and then is rising here. Now, I'm not saying this is absolutely 100% correct, and you'll be able to do this across the whole day, but certainly at some points, it's this sort of order of magnitude kind of thing that could be very useful. And this is a really super simple example we've shown you here in literally just 11 lines of code. So what I'd like to say is that now you can do this for any of the stocks or instruments that we carry on our system, and all of the news is done for you. So if you're lucky enough to have that, you can have all of that already. However, there is more complicated stuff available and more complex stuff available. So we're just looking at compound sentiment, which is one particular lens on any particular text article. Here we're looking at, we have other products. This is called MarketPsych Data, which is a very complex product, but delivered very easily to you, which looks at all sorts of different kind of emotions in the articles and picks up those particular sentiments and topics in things. So sentiment, optimism, fear, and then for different asset types, we have different types of topic which we can pick, which are unique to those here. For cryptocurrencies, you might be interested in attacks or code upgrades or forks or whatever. All of that kind of stuff is all covered for you. So yep. So we aggregate all of those scores into these sentiment indices, and that's derived from 2,000 news sources, 800 social media sources for lots of assets from 1998 to present, available at minute, hourly, and daily levels. And that's the kind of instruments that you can sort of get here from commodities and so on and so forth. So that's a very, very simple example. I think that's it from me. If you have any questions, I'm sure I can handle them later. And I'm going to hand back to Eve, if that's okay.
Yeah, great. Thanks very much, Jason.
Okay, I'll stop sharing now.
Take it back.
Yeah.
So I'm back. Yeah, I think the nice thing here is, indeed, if you want to summarize it, my example is less than 100 lines. Here is less than 10 lines of code, just to do some sentiment analysis. And more often than not, you really see like these, the leading indicator characteristic of sentiment. I mean, this is what happens. And these days when the machines are doing the same stuff, maybe in a more sophisticated way than what we have just seen, this is explaining what this is driving, right? It's when you read something on your screen, on your terminal, and then you say, oh, well, okay, and now we jump in, jump out, do X, do Y, do Z. To have some leading indicator is always what we're looking for in the algorithmic trading world. So this was just like because the topic is so hot at this point in time, to better understand sentiment. Now these days, maybe more of the masses. All right, the article here, the Medium article, you have the link to it. So everybody should have, I mean, you see it throughout, the link to my slide deck. And there is A, collection of the links to all the resources. B, behind every screenshot, I have the links as well. So when you hear click on it, you will be redirected to the article itself. It's a Medium here. It's by Riley Media in their channel, right? And as I said, it was an updated version that we did and was published in December, right? And I have, for today, I have the updated code example with me. So what this is covering is really like a little bit of background. Of course, it's a shorter article. Then here about the strategy, then the platform on which the strategy is implemented, the data that we're going to use, and also the software. I mean, these are the main ingredients, right? It's not that much, but we need something, right? We can do many things on a theoretical basis when we have historical data, but in particular, we need obviously a platform if we want to do real trading. So today I will show some paper trading, but it will be in the same way as you would trade your real money. And with regard to the AI machine, it is based on a real account there, right? So feel free to go through it. I have the summary and all the major ingredients in my slide deck. What is required to follow along? There's no way around it, is that you set up a demo account, which is for free, which takes maybe, I don't know, 5 minutes total, maximum, I would say. Oh, I was like, sorry, maybe the screen is not yet showing. So let me, maybe, I was told that the screen is not showing. There's sometimes a mess up when you have multiple screens. So I hope that the screen is now showing. Maybe someone can confirm.
Yeah, it's good.
Great, excellent. Yeah, sorry about that. It's I did a GoToWebinar recently started getting issues. I never had issues when you have multiple screens. Usually I use 3 actually. And this, I clicked on my main screen, but it didn't show, so I needed to go to the other screen first. glad that we could heal it. Yeah, here I was showing the article in the slide deck. There is a link to the article, which covers a little bit of background, strategy, platform, data, software, what I was commenting on before. It shows how to set up and get up and running with the Wanda account. And then the code shows up, the 100 lines that I mentioned in the title. But I have this separately for you as reference. You have it here. You could basically go there, copy it, and paste it. But I have prepared a gist on GitHub that you can access so that you can download the code more easily and don't need to do any copy, paste, or what. Right, so that's the article. And if you are interested in the field, I got some questions which sounded to me like we have also listeners today, followers today that are relatively new to the field. What I'm always intrigued by is like the description of the history. And these are two more recent books about algorithmic trading, quantitative systematic trading, investment. There's so many terms, expressions around that. So there is the book by Ed Thorpe, recent one, A Man for All Markets, pretty interesting. And he's the guy who wrote How I Beat Dealer, right? So if you're a blackjack, maybe you might know him. And this is his bio. And there's the other book by Gregory Zuckerman, which I can also recommend. It's about Renaissance technology, and Jim Simons, The Man Who Solved the Market. Both are excellent descriptions of what, like on a larger scale, on a hedge fund level, algorithmic trading, systematic trading, quantitative investment is all about. So if you're a little bit in the field, are new, want to get more informed, or like simply these books like myself, I can only recommend these titles. I have listened to them both. I have them in printed form, but I've listened to them as audiobooks as well. They are available. But now let us get started. Let us get started with the code, right? Trading platform. And as you can read in the article, as I mentioned before, we go with Wanda. And why Wanda? Yeah, over the years, they have proven to be one of the providers with, I can say it, there's no relationship, no affiliation whatsoever. I don't make money if you sign up there, but they simply have, from my point of view, one of the best technologies for algorithmic trading, in particular for retail traders. If you're not like from an institutional context, where you have completely different means and maybe $1 million budgets to connect to the different exchanges, etc., and venues. But for someone who wants personally get started, maybe to try it out or later on to apply it in a professional context, this is proven to be the easiest and best venue. Now, CFD trading is not possible legally in all jurisdictions. I'm aware of that. But for the demo accounts, this shouldn't be an issue. It's only if you want to get started real live trading with all the legal stuff that follows. So you can sign up there within minutes for free. Here behind that, there is also the link to which leads you to the sign up page. There you provide the country. Probably should choose a country where CFD trading is allowed properly, like in Germany or the UK. And it says the ultimate demo account, and I can confirm that. So we have real accounts with Wanda. I have a bunch of demo accounts, what I'm going to use today, and they are basically the same. So it's like easy when you develop something and later on you would decide to move on to live real trading. The code would be the same. You would just replace your credentials from the demo account to the real account. But that's also not the case with other providers. Let's say, for example, with interactive brokers, etc. It doesn't work completely differently. Different technology, different setup, different capabilities for the demo account. Here, a full-fledged capability in a way of a sandbox account. What you need on top after you have set up the account is that you need to install to follow along the code that I'm going to show, TPQ-OA. So here's the line pip install from Git. And then you need to create a configuration file. It's pretty easy. You see the whole configuration file down here, right? So it's just 4 lines. It needs to have Wanda in square brackets. The access token, here you need to put your access token that you generate in your account. The account ID you figure out also in your demo account. These are just two numbers that you need to paste in here. I would stick to the very way this is shown here. So with the planks and everything written in the same way, one all lowercase, but this is all case sensitive, etc. And then account type is practice, because you probably will be, at least in the first instance, be a practice account, right? So that's basically it. In this context, in terms of preparation, getting such an account up and running, then installing the package on top, of course. I mean, I didn't go through the set of packages that might be required, like NumPy pandas. I would assume that you have a basic Python installation, that you probably have some JupyterLab or Jupyter Notebook running, that you have NumPy pandas and matplotlib installed. But I don't think that there is more to the Python story than that. The only special thing here is the little wrapper package, which installs other packages as well. Here's a disclaimer, please read it carefully. Nothing that I'm going to present has anything to do with investment advice. It's not a recommendation or anything in this regard. All the material that I'm going to present is for technical illustration. And you must be aware that in particular, trading CFDs, highly leveraged contracts in general, involve a number of risks. So you can even lose more than what you deposit. But for a paper trading account, this is fortunately only paper, and we are talking here only technology, not investment in this regard. Here, in the meantime, I'm looking here and there to the questions. If they are not directly related to, so feel free. First of all, feel free to post questions, that's for sure. Many of you have done so already. But if they are not directly related to what I'm presenting, I would rather collect them and towards the end would address the single questions in this regard. Right, now the trading code. Here first, resources and links. If you are in the slide deck, you can simply click on them. So first the article that I've shown. Then I have a gist. So the article was here, right? Then I have prepared a gist for you. Algorithmic trading, less than 100 lines of code. So here is again the link to the article. Here is the link to the slide deck. Oh, I think I've changed the name of the slide, but you have it anyways. I need to update this. Then you have my Jupyter Notebook here, which I'm going to use in a minute, where there is API access, data is retrieved, a little bit of backtesting is done, and already the trading. So it's not that much more. This was the promise and the value proposition. And I have also here the Jupyter Notebook with the code from Jason from before. So maybe some of you have Refinitiv accounts so that you can follow along if you want to do it. Otherwise, you still can have a look at how easy and straightforward this all is. So the gist, publicly available, you can access it as well. Yeah, before we get to the AI machine, let me dive into the code side of things. I'm going to open my Jupyter Notebook. And what we need is, here I have a sample config file, so just that you see how this looks in general. This is also found in the gist, the sample config file. You can use that as a template and replace it. So when you open it, this is simple text files, nothing special. It's just, I think, common practice to use .cfg for the text-based configuration files that are used in combination with the config parser module of Python. And there you see, right? One replacement, two replacement, and you should be good to go. Not more. And this is accessed. I have my real configuration file one level up here, so I'm not accessing the sample one. This wouldn't work. I need the credentials, and here it's now connecting to the API, and I'm retrieving history. You see here 1 minute bars. I've updated the code here to a more recent time frame, actually to a pretty current time frame, right? This is for the 24th. This is yesterday, given that we have the 25th today, and we get some 424 minute bar values for euro, US dollar. I think the original example was like I don't know, second, third quarter of 2020, but this is the most recent data that we can get, 1 minute bars. And you get down to the 5 second level. Of course, you can retrieve daily data. You can go back here a bunch of years. Actually, I think they provide for every instrument that they have from the very beginning. They provide complete data sets. So sometimes when people ask you, oh, where can I get like intraday data, etc. It's hard for like licensed data, let's say stock data or options, for example, to get proper data for free. But with this API, you get like for this broker basically all the data for free via a nice REST API. Single call, you have the data, and you can get started with at least with all the technological components of algorithmic trading. When you later say, still, I want to trade now stocks, for example, which Wanda does not provide, you still know the technology, the skills, and you have the know-how to do it, but then maybe based on a different API with different data, but the rest hopefully stays the same. Now the strategy, we're going with a simple time series momentum strategy, which is explained, and there's also reference in the article, which basically says that we have a look at how the stock evolved over the last, let's say, 5, 10, 50, 120 intervals. See here, I'm going with 15, 30, 60, 120, 150 minutes, right? And what we calculate here is the average of the returns that have been observed over this time window. So when we stick to 15, this would be 15 minutes, quarter of an hour, and we simply take the average for the most previous quarter of an hour, 15 minutes, and if the average is positive, we want to be long because we would assume momentum-wise that this positive trend, positive momentum, will be there for a little bit longer, right? And when it is negative, we assume that the market will go further down on average, right? So we take an average here where we go with 60 minutes, right? We have an average of the returns over 60 minutes. So there might be up and downwards movements in there, but we're talking here average, and this is what I call here the time series momentum in this context. The calculation is done pretty easily. We just calculate the log returns, and then I iterate here over the different intervals, and I can visualize them easily here by doing our vectorized backtesting, where I use the momentum value as a proxy now for my position. I would say, well, momentum is positive, I go long, momentum is negative, I go short, and I earn the next periods, the next bars return. So therefore I do a shift by 1 minute here. And you see, for some of the numbers, this looks promising. For others, it doesn't look that promising, right? So R is our baseline investment, passive investment here. R, it's dark blue. And dark red is here for 150 minutes, has a positive, slightly positive return. It's just 1 day, right? And the best one here is the 60. So in very simplistic terms, you would say, well, the 60 here has proven to be the best configuration, so we go with 60. So this whole strategy, the way I've set it up here, has just one parameter. It's not like a big, highly sophisticated, deep neural network model with a gazillion of hyperparameters that we need to fine tune. It's just like one single parameter, the number of intervals that we take to calculate the momentum. Right? And we would go now, given this reasoning, with the 60 minutes. So 1 hour momentum is here the winner. But change the data, probably the numbers change significantly. So, or I can say change the day for which you analyze the data, the numbers will change as well. And now we have the trading code here, right? So that's the trading code. Before I get into that, let me maybe do a little bit of demonstration. So we have a few elements. We are connected here. Here we get started with. We are connected to the Wanda API. So Wanda is our object, and this gives us historical data. But not only can we retrieve historical data here with the broker, we can also stream live data, and we can place orders. So speaking of streaming live data, I have the Wanda web app open here. So you see this is live data moving here, but I need to probably, let me update it. I just tried to keep up with the last time where I had a look at it. So this might take quite a bit. So it's now retrieving the data in the backend. going here with that. And now we are time-wise up to date. You see this is UK time here. I'm Central European time. So it's 1 hour before. And you see here the real-time updates. When I would go to, say, 5 seconds, for example, you would see the candles, the bars moving a little bit faster, right? This is now 5-second bars, but the whole thing that we have done backtesting wise was based on 1-minute bars. I simply let it know on a 5-second bar so that we later on see a bit more action, right? So what we can do now, I can also stream on the stream data, euro, US dollar. There is a helper flag that I like to use for demos. So I have stop 10 and it now starts streaming here via the API, same data that we have seen before. So there's a limit with regard to the number of ticks that we get, never more than 5 per second. And now you see we have retrieved the very current, the most recent data here for EURES. So of course, we can stream others as well. For example, they provide Bitcoin data as well. So here we now get the current Bitcoin data also streaming. So this is one capability that we need for algorithmic trading. We need to get access to the real-time data streams, right? Historical data doesn't really help us with algorithmic trading, at least not if we want to trade intraday, right? When we are end of day oriented, of course, when we just set up once a day a position and check it towards the end of the trading day and reopen, re-enter next day, this might work with historical data only, but intraday we need access here to the streaming data. So that's the one thing, right? Here, streaming data. You get it also, you see here with the demo account. And the next thing is, and this is used here as well, let me see here, you see like the create order. So this is for trading. That's the second important element that we need. That's Wanda create order, right? And now we can create an order for euro, US dollar, let's say. And I need to specify the number of units. So let me quickly check. Here you see there is, I wish this would have been a trade by myself. This was some zombie trade, demo trade for Brent crude oil. And this has made 100% with leverage. This would be, oh my goodness. This is 100% net, right? This would have been 1,000% plus. Oh my goodness. I would have traded that. Anyways, that's not the topic now. It's just paper success. Nobody pays you for the success on paper. You see, this is going up and down, and I can, of course, here via the web interface, I can do trades, buy, sell. But here is just like the BCO US dollar position. And when I go to the code and execute this trade, I get back the JSON object with all the data, time, when the order was placed, when the order was filled, what was the fill price, and the margin that is required, and the half spread cost that is associated with it. So we get like full information, full-fledged information with regard to the order. And down here, we now see my little test trade, 10 long. Here, doesn't move currently that much. You see here it's going sideways last couple of seconds. But based on my Python code, here a position has been opened. So that's the second thing that we need. We need access to streaming data, and we need the capability to place orders in a programmatic fashion. And around that, within that, at the core of it all will be the signal generation, which says, well, I have retrieved real-time data, I have crunched the real-time data, I have generated a signal based on whatever strategy I've implemented. Here we have the simple momentum-based strategy, and then I need to be able to place an order. Right? And of course, I can add whatever complication I'm fancying. All right, I can add to the code then. But this is, I would say, the minimum setup when we talk about our 100 lines. So here I have my position open. Not that much happening. And when I now go and reverse this to like -10, I'm closing out my +10 position. So this is completely symmetrical here. So now I have closed the position, and the position has vanished here, right? I can increase this a bit. Here, as easy as that, a simple line of code, not even a code, is one call, one method call, and I open and close positions. So let me maybe leave it for later on. It would be +10, opening long position, and this will be closing long position. Of course, I could change to short, and this is what the logic here is doing, right? So the logic will not go long and then close the long position. It will go long, and when there's a short signal, it will close the long position, and at the same time, it will go short. So we will change positions. So when we have a look at the code here, it inherits from the major class, and the means that we use here is the method onSuccess. So this is the method that is called whenever there is a new set of data, time bit asked, that is retrieved. Right here we had the very simple case, and by default, I can show you the wonder on success. The code here, this is a pretty short method, and it's supposed to be overwritten by the real logic. By default, and this is what we see here, it only prints out time bit ask. So that's, I would say, the minimum thing that we can do on success. Stream data retrieves data. Whenever there is new data, it calls immediately on success. And this is now our tool here. We inherit for the momentum trader from the original file. We have a little bit of housekeeping and management there. And then we rewrite the story with regard to the on success method. I have a little helper output here that we see how many ticks we have retrieved. We append the data to a data frame. We do a resampling. I now go for the demonstration with 5 seconds. The backtesting was 1 minute. I go here with 5 seconds, right? Because otherwise we would need to wait too long. But for the AI machine, I've prepared an example. I hope it is still running properly. Then I calculate my returns. I generate the signals here, right? And then we go here with our logic, and we only get started when we have enough data. So this if clause here is simply related to the data length, because I get started with an empty data frame, and for my momentum value, which will be 5, I need like 25 seconds worth of data. So that's what I need. And then we have the logic. When we have a long signal and are neutral or short, we go long, print out. If we have a short signal and we are neutral or long, then we go short. So this is what is executed here. And once we are finished, it will close out the final position. So I don't have the close out coded here. I do it interactively here. So that's the basic idea. There's not that much more, right? We collect the data, we do some resampling, we calculate our signal, and then we check our position and what the signal is. And depending on the constellation, we go long, we go short, we go X and Z. And for demonstration purposes here, I have this little stop factor, and when I execute the code, it now gets started collecting the ticks. Just this counter here showing, so that we see that it's indeed working. And once we see here the first message going long or going short, I don't know what it will do. We could, or hopefully can then check here the position that has been opened. So it needs 25 seconds worth of data. Right. Once it has enough data, it will for the first time check the momentum and then place an order accordingly. I hope it will place some order soon. Here we go, going long for the first time, 10,000. Data was collected, and we have here the 10,000 position margin is 333. We have a leverage of 30. maximum here in this account. I recently lowered it given the market realities from 50 to 30. Now it's going short. You see a change to short. Margin is the same no matter what side I am. Margin requirements are the same, and it changed back to long. So the example here, the very example, is constructed in a way that it trades rather quickly, right? So, and it's still running here. We had to go long, we had to go short, went long again, and when it reaches now 200 ticks, it will stop here, right? The final position is still open, 10,000 long from the logic. And what this now does here, it closes whatever position is there and gives us now, with pretty print, a little bit of a nicer view on such a object, on such a JSON object, with regard to what we have just executed, the final trade here in this context, right? Trades closed, what was the price, realized P&L, the trade ID, etc. So that's it. This was an algorithm. It was not the most sophisticated algorithm you've ever encountered, probably, but it is, after all, algorithmic trading based on a standard financial indicator, right? There's somebody asking whether I've tried this with real money. So this is real context here. No. This is not about real money here, right? This is a simple demonstration, illustration. And in particular, what I've been showing here on the 5-second bar level, this alone, the transaction costs, you could have, in theory, so let's just fantasize. In theory, you might have 100% perfect prediction accuracy, but the transaction costs, if you trade too often, will eat up everything that you might gain from your predictions, even if you have a pretty high prediction accuracy. Even for 100% of 5-second bars, it might not be enough movement on average to get the average transaction costs out. So again, this is not investment advice, and the question is whether I put money behind this or not. It's not really a valid one, because this is about technology. But overall, such an indicator can be pretty well used in a proper context, right? And the proper context is basically what I wanted to show you at the very end, right? Where it says here the AI machine. We have now the code. If you go the route and set up your paper trading account and install TPQOA, you should be, within, let's say, half an hour, also be able to follow along and to execute the code. Should be easy, but of course, when you want to do this on a little bit more professional level, and this is how I understood the question, would you put your own money behind it? This is why we have developed primarily for internal trading the AI machine, where we differentiate in 3 main areas, right? We have the prediction engines, which might be as simple as a technical rule that we have just seen. You can use statistical methods such as regression, or machine learning such as classification, let's say based on logistic regression. You can use deep learning on a highly sophisticated level based on Keras TensorFlow. We also had an integration working prototype with an automated machine learning platform, right? And then we add to the whole mix like decision rules, like entry rules, stop loss rules, trailing stop loss, dynamic stop loss adjustments, take profit orders, position sizing, capital allocation. So this is what always comes on top. Sometimes people, and I myself, sometimes fall short of thinking it through. I say, well, if I have a good predictor, that's nice, but it might not even be half the story. You might need to have proper rules here as well. Capital management overall, capital and risk management. And then we have the whole technical side of things. So if you want to scale what I've shown now based on a few lines of code, you need to take care properly of data streaming, transaction streaming, position management, profit and loss calculations, visualizations, logging and reporting. And this is what the AI machine is about in this context. And I have it open here. I need to reload it. Maybe it has kicked me out. Yeah. Let me reload it. Sometimes when the stuff runs too long. Waiting for the AI machine. Here we go. I open now. Oh, let me get started before I open that one with the strategies. So the AI machine basically has three parts. The one is the strategy part, and if you ask me real money, I can say now at this stage safely yes. Here it's a little demo on the AI machine with real money, but real money is like yeah, pocket change. Don't get me wrong, but it's just like, I don't know, a few euros, I don't know, but it's real money, but not real money in the sense of that I consider this a proper investment. So this is the momentum strategy. It's, you see here, Jupyter Notebook. And of course, it looks a little bit different, but this customizes the UI later on, the form via which I can do backtesting and trading, right? And there's not that much about initialization and validation beyond the standards. And here I come up with the momentum. So that's the core of the algorithm, right? It's like two lines. Here I calculate the momentum, and here I say go long when the momentum is positive and go short when the momentum is negative. Right? So this is what is done here. And here on signal, it enters short or it enters long. Here are a couple of defaults, and I went here indeed with 1 minute bars and 60 minutes. So this is really the winner of our little backtest where we had like, I don't know, 5, 6 competing parameterization. So once you have done this, and this was the idea for the AI machine from the very beginning, you can use the very code that I've just shown for both backtesting. So here is a backtest. I can do another one. Here, backtest. Webinar. Momentum. So here I need to choose one of the templates. Long factor, short factor. So I can go twice the amount short that I would go long, for example. Here, momentum is just 60. These are the proportional transaction costs. So let me put them for a second just to a very low level. Too low. And this is the testing, right? This is the period that we had, 24th, 25th. And I can get started with the backtesting. Since I have done such a backtest already, the backtest shouldn't take too long. Usually what takes long with the backtesting is the retrieval of the data. Let's say you have 1 minute bars for 1 year. This takes a bit, but here you see it finished pretty quickly because it has retrieved the data and has stored the data. It has cached the data. And here we now see like how this evolves. And here it goes now until the last available minute bar. So when I tested it before, you see this strategy was actually doing okay here. But over the last couple of hours, so this morning when I did this for the last time, it was up here. But now for the last hours, it's coming down strongly. So it wouldn't have performed well for the last, I don't know, 6 hours roughly. But yesterday and until this morning, it would have had a slight positive impression. But no matter, again, this is just for like illustration purposes, and the Jupyter Notebook had just until that point here. So it was only for yesterday, and here it includes today as well, up until the last available minute, right? So you do your backtesting. If you're interested in more details, you can also have a look at the evolution over time, but there's lots of data, usually not too interesting. And now the point comes where you say go live, right here, go live with that one. And let me put it in account 2, because account 1 we have already euro US dollar running. Stop loss distance, take profit, number of bars, number of allowed stop losses, long short factor, model level stop loss, model level take profit. Then we have profit capture. You might wonder why I use like take profit 30 here, because I adjust. This is what we call dynamic trailing stop loss. So we adjust as we go. When we reach certain thresholds, we adjust even the trailing stop loss. So it's like a second order adjustment, if you like. And when we're good to go, I say add model, and this is what my imagination was before we started that project, that I have like with original Amazon one-click buy, right? I have one-click deployment. The code for backtesting is taken, exact same code, and it's now deployed for real-time trading, right? now have two here. So this traded immediately. This is on 1 minute bars, and you see there is just like nothing, not that much to observe. There's just one up tick, so the prediction is positive here, right? And currently it's trending positively, but it takes a little bit until it recovers the bid-ask spread. So now it's in positive territory. So this was like a good prediction. Therefore, you see it's green at this stage, right? And this now takes a bit, of course. It will have, there's a second prediction, you see, and now it says accuracy 100% so far. So for all the finished intervals, accuracy was good, 100%, we would like it, right? But this is now, we would need to wait, and we would see every minute, we would see like an update here. But when I go, and I started this one this morning, that's the reason why I started it a bit early, it now takes quite a bit until it loads all the data, and this has been running now for hours. So this is 1 hour slice that you see, and you see there's a long trade, short trade, long short. So it changes position quite often, so well too often. So 1 minute bar, people asking what would you trade? We typically focus from 5 minutes and longer. So most stuff that we have done is half an hour bar, right? Not 1 minute bar. But here you see this has been running for quite a while. Here you see, for example, profit capture, position offload, right? So these are then trailing stop losses that get hit. So every single element is shown here. And you see like all the green ones are the correct predictions, the red ones are the wrong predictions. Overall, the prediction accuracy has been 51.3%. But the hit ratio is pretty low. So the trades themselves don't make that much money. You see, this is primarily also due to the transaction costs that are involved, right? So this is what it can do with the AI machine. A very simple example that we have had from the article that we have checked in the Jupyter Notebook, but it's equally as easy to put it here on the AI machine. And the big thing, like, it's like the tip of the iceberg, so to say, is the strategy code itself, but the deployment, and here what you see, like the visualization, the following along the transaction streams and all these elements, that's the hard part. That's like maybe you have a code, an algo that is 200 lines long, but your deployment code might easily get to 20,000 lines of code. So when I said algo trading less than 100 lines of code, for Jupyter Notebook, that's true, that's doable, but in the real life, in the real world, real financial markets, deployment is typically what is the hard part. And actually, why reinventing the wheel, and why should everybody write 20,000 lines of code over and over? I think the IP should be in the prediction engine and the decision rules. Yeah, we have a few questions open, so I might get through the questions there as well. Yeah, I've answered that question. There was a question with regard to the sentiment index and how it is constructed. I mean, this is like a detailed question. They're like the experts, the product owners and managers at Refinitiv. So if you are interested in that, you can email me, and I can forward maybe your email to the people at Refinitiv. They can help you further. So I'm not really the right person for that part. The Refinitiv slides for reference, I have uploaded the Refinitiv code at least. With regard to the slides, I can check with Jason in this context.
Yeah, I'm sure we could. I could send those 3 slides to you.
Yeah, I can host them as well, and then I add the link in the gist, for example.
Exactly.
Excellent. So there's somebody asking about harmonic patterns. I'm all but an expert with regard to harmonic patterns. I'm pretty sure there is some support, some package, some approach for everything out there, because there's such an active community. But with regard to this particular topic. I even have back home, just out of curiosity, I ordered a couple of patterns trading books, but this is not really my expertise in that context. I'm sorry that I can't comment more on that.
There are some packages that can do that for you, like resonancy frequency kind of stuff. Just Google that and then or check the Python. Then you'll have, there are a number of libraries. I can't remember offhand what they are. I did check them out a while back, so they do exist.
Great. Maybe we can forward or put something out there. Yeah, now there's a question. That's the reason why I waited. Somebody says, and I fully agree, there's a bunch of information out there for what, for me, questions asked. What are the top 5 steps or advice to get involved in this field? And I only have one answer that I fully stand behind it, and that's our certificate program that we have started a few years back and that we are working on all over the year with regard to what we provide in there. So it's our 16-week program, 200 hours of instruction plus 1,750 pages of documentation, 10,000 of lines of code that we provide there. So it's a wealth of information. I mean, 100 lines of code sounds so easy, right? But in the end, the whole field is not only exciting if you want to dig a little bit deeper, and if you want to maybe do it on a semi-professional basis. So, well, this might be a way for me to manage my money, for example. Then you need to dig deeper, right? With regard to financial data science, with regard to the AI related elements, but in particular, and I think there is really a value add of our program that we consistently show and teach how to do the deployment in the cloud, how to work with Docker, how to set up cloud instances and all that stuff. Also teach the tools that you need, the tool chains, etc. So everything else that I would now say would be, from my point of view, second best or worse, right? So the certificate program in algo trading, if you really mean it seriously, this is what I would recommend that you have a look at in this context. For the execution, yeah, somebody is saluting me for the statement that 20,000 lines of code are sometimes or often or regularly needed for the deployment. For the big companies, this usually means millions of lines of code, right? Or hundreds of thousands at least, right? So that's the point. That's the hard part, right? That's what I call the last mile problem in algo trading, right? Somebody asking about whether we run a fund. No, we don't run a fund yet. But it's still on the horizon. But I'm not too hurried in this regard with regard to managing other people's money at this stage. There's somebody asking about TradingView. I'm not on TradingView, so I'm sorry about that one. Can't really help out with the TradingView thing. No, access to the AI machine is not free. Only people who do our program can get access to the AI machine. So because this is quite involved in this context, the only way, again, to the AI machine currently is via the certificate program. I'm not saying that in the future this will be different, but that's currently how it is, right? Yeah, with regard to the AI machine, again, we neither sell it nor provide free access. It's part of our whole education effort. It's one of the platforms that certificate students can get access to in this context. Of course, there's somebody asking about security issues with regard to API for algo trading. Of course, there are security issues, also something that needs to be addressed properly. A part that for the AI machine plays a big role for sure. But even if you set it up for like a custom tailored deployment context, it's an important topic to address the security issues around that. And also, I mean, there are different dimensions of security. Let's also just mention one more dimension is reliability, right? In terms of like, where do you run that stuff? How, what is the uptime? Is it in a professional data center or do you run it on a local machine? So there are many considerations once you want to get on a semi-professional path that need to be considered, right? So. Excellent, President. Thank you for the nice words. That's for sure. So I think we are ending now. There's somebody asking whether you need some knowledge beforehand when you get started. Our program starts basically from scratch. So some experience never hurts, but you can get started with a program indeed from scratch. So what I usually say, you need to know how to work with your computer. You need to know how to open a text editor. You need to know how to open a terminal. But I would say that's basically it. The rest comes with the program. And that's the reason why we have like 1,700 pages of documentation and all the code there, right? So this is like in this context. Yeah, indeed, this is all recorded, and I will put it on YouTube later on, right? There's somebody asking about deployment opportunities. In this regard, you can reach out to me. It's hard to talk about it. We are not really like in the recruiting area because we have usually delegates from 60 plus countries per year. So just recently got an inquiry from Canada, from here, from there, right? So we cannot really be active in the market. But for certain markets, basically home market as well as London and New York, I have a little bit of an idea, but not for everything around the world. So maybe you can drop me a line in this regard later on. So the cost of the program, you find it in detail on the webpage. So soon we will announce the next super early bird round. So this is what you should have a watch out for, right? Yeah, minimum requirement is set. Like minimum requirement is simply that you need to know how to open a editor and that you know how to open a terminal. That should be basically it. Again, thanks for the nice words, and a good point to wrap up. Thanks again to everybody for following along about algorithmic trading in less than 100 lines of Python code. Thanks, Jason, for the sentiment analysis case study. I hope to see you in one of the next sessions, online sessions. In the meantime, take care. Bye-bye.